Hey, and we are live. Hey, what's going on, everybody? So I am here with my good friend and colleague, Ryan Patient. So for you guys that don't know, Ryan handles my or our term loan department, and him and his team crush it. So this is kind of going to be a funny one for us, but we're going to go over some of the top mistakes that we see, and we'll just fire back and forth. Some of the top mistakes that we personally have seen people do when they're applying for financing. All right, so I will lead off. Um, and this is kind of a big one. When you're in the financing process, okay, you should absolutely not use your credit or apply for anything else anywhere else. And the reason I say that is like for an SBA loan, all right, you apply and then you have to back everything up with documents, even more than the original application. So let's say you have somebody that's about a 710 credit score and you need to be 700 or above. Well, if that same person goes and shops for a car and they go to the wrong place, and that dealership sends you out to a million different places, you're going to get all these credit inquiries and it could drop your score. So then when we go to close the SBA loan, you no longer meet that requirement and you're going to be declined, or we're going to have to wait until the score goes up. On the flip side, anytime that you put your name and signature and social on a piece of paper, on an application for anything, you want to know if it's a hard pull or a soft pull. And you also want to know how many people is it going out to. Because I have also seen people that before they come to us, they applied at a couple, one or two or three brokers or an online, lead aggregator, and they have probably 20 or 30 credit pulls. So when they come in, you're thinking, hey, I got 700 credit, or I have 680 credit. And by the time we get it, it's like 590, okay, or 600. And that totally changes what program is available. So that is probably one of the biggest mistakes that I have seen, and we're going to go into a bunch more here. Ryan, what do you got?
I mean, that's actually probably one of the top mistakes that everybody makes because they're also trying to shop around while we're doing, and I'll just use us for a very specific example, trying to shop around while we're doing the work for them. There are certain lenders that they look at that and they see like, oh, this person is looking for a lot of credit right now. So it's probably going to be a scenario that we don't want to jump into because they're obviously looking for cash. So that means that this is not could potentially be a bad deal for us. So and I've seen that happen a lot of times. I'd say the next thing is that not filing your taxes on time. I mean, honestly, guys, we know that we have to file taxes. Like, there's no getting around this. And anytime, a client tells me that, oh, well, I'm still on extension. I'm like, well, I mean, really, extension's pretty much in October. So right now, I understand that because the pandemic, there and the IRS is backed up a little bit. Like, but you're just kicking the can down the road. You're gonna have to pay these taxes and file these taxes at some point. And right now, you're talking about 2 years in the rears from filing. Ultimately, you're not going to get funding because you don't want to pay your taxes or because you don't want to file your taxes. That to me is a very, let's just say, it's a stupid mistake to make when you're in business.
Yeah, it definitely limits and eliminates a good amount of programs that you could qualify for. That's not to say that you have to file by what I think April 1st. You can be on
Correct.
extension. But what Ryan's talking about is being 2 years back, okay? Because I've seen that way too often, and it's just not a good situation. I think another common mistake that I see all the time is people waiting too long to apply, and here's why. Let's say you get the idea that you want to apply for something, and you get the application. Now you wait and you wait and you wait, and then something comes up, like you're putting more on credit cards instead of getting the line of credit open or the loan, and now all of a sudden you have, you're basically know you're going to run out of cash in a little bit, or you've had a few negative days, and that pain causes you to fill out that application and apply. Well, what happens is your credit is probably down because you've been putting every your expenses on credit cards. your bank is now not in the best standing. Okay, meaning you don't have high average daily balances, you have a couple negative days. And so banks can pick up on that based on certain things, like when they do a cash flow analysis or when they look at your credit. So if you waited way too long in order to apply, well, now you're going to limit or hurt your chances of what you can get approved for. The best time to apply for financing is when you don't need it, right? It really helps you get approved for much better options. What else you got, Ryan?
I mean, right now, I hear this all the time. Oh, that rate's too high. Buddy, it's getting higher. I mean, mortgages are starting at 7, 8, 9% right now.
Yeah.
So that's a secured financing, right? So with, everything that's going on with the economy, everything with the Fed is just constantly printing money. I mean, interest rates are going to continue to go up, right? And as
Yep.
long as prime goes up, our rates are going to go up too. So it's just that's what inflation is, right? So we're not getting the types of low rates that we were 1, 2, 3, 4 years ago. And that's a common mistake that people take. And it's a stupid mistake because the difference between like a 11.9 interest rate and a 9.9 interest rate, and listen, do the numbers, right? I'm just paraphrasing here, is about $20 a month, right? Depending on, the kind of money that you're borrowing. So, and I'm talking like maybe $30,000, $40,000. You're not talking a lot of money in the grand scheme of things. But if you're willing to give up, borrowing on a 5-year term, $35,000, $45,000 because of $20 or $30 a month, I mean that doesn't make sense, because eventually you're going to fall under the guise of having to borrow something a lot more expensive, that's going to cost you a lot more money, and it's just because you think that the rate's a little bit higher than what you want to pay.
Yeah, that's a good one. I always tell everybody, the way you need to analyze, first and foremost, listen, everybody wants the best rate and term and the best deal. And I understand that, and we try to accommodate that. However, unrealistic expectations will hurt you more than they'll help you, because there's an opportunity cost. Meaning, what's the opportunity for you not having that piece of equipment, right? If you can make an extra $3,000 a month and you want to sit on the sidelines for 12 months, the hope rates go down. Well, you gave up $36,000. Okay, so you're telling me you couldn't have more than made up for that if you move forward with it today? Absolutely not. The other part of that is there's a little bit of you get more of a write-off. I'm not saying that's great, but at the end of the day, if you're going to analyze taking financing, you need to say, hey, does the new monthly payment or new payment I have, is the increase in cash flow larger than that? Yes. Well, guess what? You're not paying for it. The increase in cash flow is. Yeah, I get it's still coming out of your bank account, but it's not like you're getting zero in return for it. Also, does the increase in profit cover the cost? If those two things check out, yeah, all things being considered, you want the best deal possible. But if those two things check out, it's worthwhile to explore and to move forward. Another top mistake I get is, I'll put this. Let me see how I can phrase this. Going to the wrong place and not knowing the right program. Those are two separate ones. Let me start with going to the wrong place. Okay, banks don't have all the programs that you need. Brokers, everyone's had a bad experience with a broker. I totally understand it. I don't blame people for not wanting to try somebody else. Look at reviews, do your research. Okay, that's why we do so well, because we do what we say we're going to do. And we actually try to help people. But the challenge is, if you go to the wrong place, like if you went on, let's say, LendingTree, and I'm not calling out LendingTree, it basically tries to match people up with brokers or lenders. But the problem is, they often resell that data, and then that data gets resold. So now, instead of working with one or two people, and you don't know how they're going to shop you, they could be doing a million hard pulls. You might be having 5 or 7 people call you, which is what I've heard over and over and over again. And when you have that many people calling you, it's easy to make mistakes. It's easy to get confused. It's easy to have 100 credit pulls. So that's just something you have to watch for, is going to the right place, going to a trusted place that's going to be an advisor for you and work with you for a long time and help your business grow or help you grow, right? That's huge. What else you got, Ryan?
No, I mean, it's a great point that you just said. Something that's this was like back in 2014 or 15. I can't remember when. I was, I needed a mortgage, and I went to LendingTree, and the exact same thing happened to me because I worked with them before, and they didn't do it the last time. And so what I think is, just like a lot of these businesses do, is they build up a good name, and then they sell it, and then they completely change everything about it, how they work. And so you take a trusted name, and then now you're getting farmed out to 10 different, brokers, and you're getting calls. And that's exactly what happened to me. I got 10 different phone calls. I got 10 different hard pulls. It was insane.
Yeah.
That's one thing. A big thing. So, talking about mistakes, stupid mistakes when borrowing, not understanding the difference between, like, what did you make, like, on paper
Oh, yeah.
versus what was your total revenue, total sales. So just because you own a business, right, and you make $1.2 million in revenue does not translate to what your actual income is. Your income is based off of your personal income is based off of your 1040. Right. So I think that is a big mistake that a lot of people will go into, and then they don't understand why they're getting declined, or they don't understand. Let's say they walk into a bank and said, "Hey, I did $1.2 million last year. What can you do for me?" And the loan officer pulls everything up and says, "Well, technically you lost $15,000, so there's nothing we can do for you." That's again where we can help get things through the finish line that other people wouldn't. But it's all about.
Sorry, go on.
I was just gonna say, it's all about knowing what your numbers are, and listening to what whoever you're talking to, what they're asking for, and making sure that you provide them with the right information. Because if you give them false information, or not the correct information, you're just gonna be sitting in water.
Yeah, I'll chalk that up. The best is not knowing your information or knowing your numbers.
100%.
And I see that a lot when it comes time for SBA or term loans or equipment or just a general, initial call. Okay, you got to have all that stuff at your fingertips already, or be able to get back to it in like 12 to 24 hours. And what Ryan's talking about in particular, guys, Ryan's program is very, very dependent on how everything is submitted. Okay, so what happens is a lot of people on an application say, "Hey, I made $1 million last year," and that million, they're not talking about what the revenue was. They're talking about what your adjusted gross income is. So if that adjusted gross income was on that million was actually 150,000, and we put a million, or you put a million, and that gets up and through to our underwriter, they'll reject it because something was overstated. Okay, and that's a big deal. Another one that I will say, and this is more common or the most common, and it's not really anyone's fault because we weren't taught this in school, but not knowing the right program for what you're trying to accomplish, right? And if you want more, just go to the Integrated Business Financing YouTube, subscribe, and you can go, and you're probably watching this on there if you're really smart. But there's certain things that you need. Like an SBA loan should be used for debt consolidation, buying a building, buying a business, or potentially even starting a business. Okay. When you talk about equipment financing, or you're purchasing equipment, that should only be equipment financing, right? Because that's a longer term use. Lines of credit should only be used for inventory, marketing, adding people to your team, supplies, things that you need every day, every week, every month. Okay. If you're waiting net, 15, net 30, net 45, meaning if you're doing a job for another business or the government and you're waiting to get paid, that's invoice factor. If you take out a line of credit, guess what's going to happen? You're going to still have that same problem, and now you're going to owe, whatever the total line of credit is, because you're going to tap it out, right? So my point being is, one, you should kind of figure out and do some due diligence on the programs that are available, or have somebody like us, a trusted advisor that is going to stay with you and coach you and guide you through the certain programs that help you grow. All right, because not everybody's like that. So knowing the program, knowing numbers, those are big things. Right, you got another one?
I mean, I think you pretty much hit on everything. I would say, I mean, The only other like mistake I would say is that some people do is they push off, they delegate gathering information to somebody else. So for example, let's say I'm the CEO, right? And I'm trying to get funded. I'm like, well, just call my assistant. She'll take care of everything for you. Well, it's may not be priority on the assistant side, or maybe the assistant doesn't have access to it when you could just go through with a click of a mouse and, have the, bank statements, application done, whatever, within a half an hour. Yes, I understand that, our clients are busy, or, you might be busy, but at the end of the day, if you want to get it done, I mean, that to me is, you got to put in a little bit of work as well.
That's a really good one. I actually have 3 people that are like that, and I get it, but comes a certain point in time where, you probably have to go through some of it and be involved in some part of the process yourself.
100%.
Yeah, because I have seen that a lot. Well, guys, what we're gonna do is we're gonna bring you one or two of these each week. Um, I'm gonna stop it there because those are some pretty common ones. You guys digest it. If this helped you, please share it with somebody. Please like it, comment. If you guys have questions, please reach out to us. We're always here, and we appreciate you guys tuning in. Thanks, Rye.
Awesome, man. Appreciate you.
Take care.